and welcome. You have tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor, Pavitra Parekh. So, Pavitra, it's a record-smashing day, really, for the equities markets, and Nifty as well as sensex have both hit all-time highs. And it happened actually just before lunchtime, even though we
after teasing us for 2 hours.
Yeah, after teasing us for a lot of time. But I would say that with this, equity has really marked and emphasized its presence, while a lot of the economic scenarios had been really telling people to pivot towards the fixed income side. So it's really the competitive nature of equities that has come in. But I wouldn't say it has been a broad-based participation with which Nifty 50 has really reached these levels. Some of the big blue chip companies have really contributed more. Let's talk about today. At the moment, HDFC Twins are the ones which are a dampener, and Bharti Airtel really not participating. They are the ones which are losing on such a euphoric day. But Reliance Industries is the top gainer, top contributor, being the heavyweight, as well as Infosys, ICICI Bank, Axis Bank, Asian Paints, TCS, some of the big counters which are really taking Nifty 50 to those levels. So about 0.5% up on Nifty 50, almost 100 points gain at the moment. Bank Nifty, let's take a look at that. A lot of big financials from the Bank Nifty component are the ones which have contributed, but it is underperforming, 0.35% up, and mid caps outperforming still, which is giving a good market outlook and a breadth and strength to the market.
Today, the mid-caps are outperforming, but if you take a look at, from the last time that we were at an all-time high, this is the sector which is really not, which is why, you perhaps do not feel like this is an all-time high, because so many of these stocks from the broader market are still sitting at 52-week lows. Nevertheless, today is a good day for our own markets. The Asian markets especially, are under pressure today. So in that context, our markets really sort of, shining. The Taiwanese index down 1.5%, Hang Seng also similar levels. And this is just a few of the markets, but across the board, you're seeing cuts come through. What's doing especially well today is the auto pack. So a few of those names will be up, and the entire energy space is buzzing because of what's going on with crude. Reliance is also, of course, one of the top gainers. On the downside, it is a lot of the metal names which have found themselves there today. So that is something that we are tracking as well. That's the market action. We're going to come back to this. But first up, let's kickstart the show by focusing on a CNBC-TV18 exclusive. The IRDAI chairman, that's Debashish Panda, spoke to us on a whole host of issues like approval to new insurers, composite licenses, removal of preference in reinsurance, and also lower capital. So Yash Jain joins us now with all of the key takeaways from that conversation. Yash?
Well, that's correct, Pavitra. So, of course, insurance sector is one sector which has been in the middle of many regulatory reforms. I, over the weekend, had a long chat with the IRDAI chairman. And in that about 30 minutes of chat, I have managed to put together some of the key highlights in terms of headlines, which I'm going to talk about in the next minute and a half to give a overview of what has transpired in the sector. As far as the first thing is concerned, and that's the vision itself, the insurance regulatory body chairman has said that they wish to double insurance penetration in the next 5 to 7 years. Penetration is nothing but the total premium collected versus GDP. If the plan is to increase and double the insurance penetration, which means the premium collected also has a vision of doubling itself, which is positive for all life and general insurance companies. In terms of specific regulatory changes, IRDAI has reduced the solvency requirement in the ULIP segment for life insurance companies. They expect that this will free up about 2,000 crore for the sector. Also, the solvency requirement has been reduced in the crop insurance segment, which is expected to free up about 1,500 crore for the general insurance sector. What has been a very important proposal from the regulator is the expenses of management and commission. Now, here the regulator chairman has said that there's a final consultation paper which is in the public domain, and he believes that this should satisfy all stakeholders in terms of having a common consensus. This is specifically positive for an aggregator like PB Fintech. Importantly, on specific company, IRDAI chairman said that Credit Access India is expected to bring its capital for starting an insurance venture in the next 15 days. By the next board meeting, they'll have all the approvals in place and they can start their insurance business. Also, going forward, chairman said that there is a possibility that life insurance companies might be allowed in the health insurance segment, in the indemnity health insurance segment. This is positive for a lot of life insurance companies like HDFC Life, ICICI Pru Life, SBI Life, LIC, Max Life Insurance. Also on the composite license issue. Composite license is something which allows general insurance companies to enter into the business of life insurance and vice versa. Here, regulatory board chairman said that recommendations from IRDAI have gone to the government. Now it's up to the government how soon they can approve it or the manner in which they can look at it. So that will be an important game changer as far as the insurance sector is concerned. Finally, the last point, a negative of one of the listed companies, the reinsurance company GICRE. That's because IRDAI said that their appointed committee has recommended removal of the obligatory premium. This could have a negative impact of about 2,000 crore on GICRE.
All right. Thanks so much, Yash, for giving us the key takeaways. Can't wait to hear the chairman himself, Debashish Panda. And let's listen into what he had to say about issuing of the composite licenses, which is a common license to operate in life and general insurance market, which, remember, is going to be a game changer for the insurance sector in the country. Listen in.
After a gap of 5 years, 2017 was the last approval for a new insurance company. And after 5 years, today we have approved an insurance company by the name of Shema General Insurance Company. So that's a matter of great pleasure. And there's another one which is ready. We couldn't bring that proposal because their arrival of the capital will take another 15 days. It's in the pipeline. So that company is Credit Access. We hope in the next board that should also get cleared. And 18 more are in the pipeline. And there are a lot of inquiries regarding setting up of new units. For the unit-linked business without guarantees, the solvency has been reduced from 0.8% to 0.6%, thus freeing up around 1,500 crores. In the past, capital will be released, which will be used for growth by the companies. So we have sent a set of recommendations. Now, the government to consider them. So that's how it is. I don't know when and what time.
You've recommended that a composite.
We have recommended certain sets of recommendations. Yeah, I wouldn't really recall each and every detail right now.
Headline.
But the headline is about lowering of the capital, so that smaller players could come, value-added services, one-time registration.
On composite?
I clearly don't remember. Probably yes.
All right, those are some important takeaways coming through from the IRDAI chairman. But with that, we're going to get into a short break now. When we come back, we'll talk more about the market move to this all-time high levels and bring you some interesting data. Welcome back. You're still tuned into Business Lunch, and let's now talk about the important global story. The Chinese market has plunged on fresh protests across the city. Remember, people across China are protesting against the government's zero COVID policy amid this fresh surge in the number of COVID infections. People have also demanded the resignation of Chinese President Xi Jinping. CNBC Asia's Sam is standing by with a report on the latest.
Investors continuing to be in a cautious mood as they have been watching these unprecedented scenes over in China over the weekend of these people taking to their streets in what is a very rare show of defiance of these zero COVID lockdowns, of course. And so we have certainly seen mainland Chinese stocks showing sharp declines today. We've also seen that spilling out into the commodities markets as well. We've seen oil prices pulling back. We've also seen the Chinese currency weakening as well. That is off the back, of course, of that triple R cut announcement we got late on Friday as well. But what we're seeing with these protests is something that is exceptionally unusual, and that is because of the scale of what we're seeing, these demonstrations in China. The protests are happening everywhere, as you mentioned, from Beijing to Shanghai to Wuhan to Urumqi, and that is what's very different here. Of course, we were talking about these very isolated incidents last week in places like Guangzhou and Zhengzhou over smaller incidents, but this seems to be a collective frustration now over feeling like prisoners in their own countries, because they are watching people around the world, of course, being able to travel. They're watching the World Cup. They're asking, why can't we sit in a stadium and not wear a mask? And so really this is just a show of discontent against what are really being described as draconian measures. And what this frustration really is about is the mixed messaging that Chinese citizens are getting from their own policymakers. Because, of course, just a couple of weeks ago, citizens and investors alike got very excited about this suggestion that they would be coming out with these 20 measures to certainly relax some of these COVID curbs. And then fast forward just a couple of weeks, and now we have another record-breaking day of cases, and we continue to, off the back of that, see more restrictions, more lockdown and more testing. Now, of course, there doesn't seem to be any appetite right now for this sort of Shanghai-style blanket lockdown. There has been some criticism of this one-size-fits-all approach, but the other catalyst here, what this has largely been fueled by, is this fatal fire over in Urumqi, over in Xinjiang. And what the accusation there is that this lockdown prevented those people from being able to actually escape that fire. The authorities have denied that, but as you have seen in those pictures, the anger is very much on full display.
All right, thanks, Sam, for that update. What's happening in China is actually historic. And we have to see what are going to be the repercussions all across the globe. With that, we'll quickly slip into a short breather on Business Lunch, but more on markets and news coming up on the other side. Don't go anywhere. Welcome back. You're watching Business Lunch. In the last few minutes of trade, Bank Nifty and Mid-Cap Universe both has lost some bit of ground, but we still really in that whole aura of Nifty 50 hitting an all-time highs today. So who are the key contributors? Nigel D'Souza is right here to give us the exhaustive list and also the full roundup. Tell us, Nigel.
Well, let's break this up into three parts. First, if you had stayed investors from June 2022, when the Nifty was on the verge of going and breaking that 15,000 odd mark, you'll be quite happy. The second part will be that, your portfolio must be not feeling like we're at all-time highs. And the third part, in fact, will be that move from last October, that's October 21, till November 2022. Starting with the first part first, from the lows that we saw earlier this year, the Nifty is up closer around 22% also. We have seen a big run. And there are plenty of big gainers out there. You have Adani Enterprises, that's the new entrant into the Nifty. You have IndusInd Bank, that's in there. Grasim, Titan, Ultratech Cement, all of them are giving you returns anything between 30 all the way to around 80%. So though the Nifty is up 20%, these stocks have outperformed. But the Nifty moves up and the big boys participate. So L&T, SBI, ICICI Bank, the HDFC Twins, as well as ITC in there, with gains of anything between 25 to around 40%. So they have been the drivers of this move, from around 15,100, 15,200 all the way to around this 18,600 that we are talking about. But from the broader markets, there have been plenty of stocks. They're not talking about 20, 30% returns. They're talking about returns of around 75 to around 120%. Couple of banking names in there, financial institutions, Union Bank, the IDFC Twins, BHEL, all of them, they've done pretty well. Canara Bank as well has moved quite well. And Apollo Tyres, that's come to life in the last few days. So though the index is up 20%, well, if you got into these stocks, you'll be very happy. The second part is that your portfolio must be not feeling like fresh all-time highs. Why is that? The small cap index is still more than 15% away from those all-time highs. So, that's from the 52-week high, in fact. That's a small cap index. The IT index is more than 20% away even after the pullback that we have seen from the 52-week high. And the pharma index as well is down closer around 10% odd. So that could be, if you have stocks that have exposure to these indices, well, then your portfolio will not be feeling that good. But we are back at around 18,600, right? We were at that level just in October 2021. However, some of these stocks, they've done their own moves. To give you a data point, the Nifty is as flat as can be, 18,600, then 18,600 now. The problem is 12 stocks on the Nifty. Some of those large cap names, well, they're more than 10% away from the October 19th level, that when we were at around this 18,600. And some of those stocks should come up for you on the screen. You have Wipro, that's 40% lower, Divi's, that's 35% lower. Name a few of them. There's a couple of those metal names in there as well. Tata Steel as well as Hindalco. The Bajaj Twins are in there with a cut of more than 10%. This we are comparing with October 19, 2022. However, few of the stocks have done very well, and that's the reason we are back at these levels. Adani Enterprises, the new entrant in there. ITC, that's played a brilliant knock. That's up closer around 40%. Though the Nifty is at the same level, ITC has been the big outperform. And a couple of banking names like ICICI Bank, Sun Pharma, SBI, all of them have done pretty well. Now, moving to the FNO list, well, and if you're comparing yet again, today's price with October 19, 2021, when the Nifty was at the same level. But if you got into some of these stocks, your portfolio would have got badly hit. IEX is down more than 40%. Though the index is at the same level, well, some of these stocks are trading sharply lower. IEX, you have FSL, you have IOC, India Bulls Housing Finance, Manappuram Finance, Strides as well in there, Voltas, Oro Pharma. So all these stocks, they are down more than 35%. though the Nifty is at the same level. But that said, if you got the right stocks, you'll be very, very happy. So you'll say, so what, the index is at around 18,600. Well, I've got stocks which are up 50, 60, 80%. And these are some of those stocks that should come up for you on the list. HAL up more than 90%. Bank of Baroda, TVS Motor, Canara Bank, you have IDFC, all these stocks give you returns of more than 50%. So it's been a good move. We're at all-time highs. There's been a good move from June 2022 itself. Some part of your portfolio must be not feeling too good. But otherwise, 18,600 in October 2021, 18,600 even today. That's in November 2022. Let's see where we go from here. Back to you guys.
Let's see where we go from here. Nigel, thanks a lot for getting us all of the details on how this move to this all-time high level has really been. But on that very high note, we're going to wind down on this edition of Business Lunch. Thank you guys for tuning in. Midcap Radar comes up in 2.